Oh, well, hello. What are you doing here? It's so lovely that you joined me in my hotel. I'm here at Sentosa Cove in Singapore, waiting patiently for my wife to arrive at the airport. Very excited about seeing her once again. And I wanted to try recording a podcast for the first time where I share some of the lessons and ideas that I've had investing in financial markets and what I've learned along the way just running a bunch of social networks for finance people and a couple of finance related industries in my life. So I'm Alex Newman. I'm actually a software engineer by trade, and a couple of times I've gotten to use this software to build products for the financial system. And as a result, talk to a lot of people about the financial system, and just wanted to share some of the lessons that these people much smarter than me have told you. You know, it's kind of funny because people really don't like you talking about the stuff that I'm going to mention in this podcast. I don't know why. It's almost like they make money, you not knowing this stuff. But as we know, the finance industry is full of very nice people who help you out when you're in need, and they're there to lend a hand. That's what people in the finance industry do. They tell the truth, they're very transparent. They tell you everything you need to know to invest just on channels like CNBC. You can just do what they say on that channel and make money. You just follow, you don't need anyone like Bridgewater or anything like that. You can just listen to what these guys say on TV. It reminds me of a line from The Godfather, where Vito Corleone is being presented with a business opportunity and his son speaks emotionally and quickly. And Vito reminds him, always tell people what you think and feel, especially when they're not in your family and it hurts your business. That's how they are in The Godfather, and that's also how they are in the financial industry. For instance, Ray Dalio, he went on TV right before oil went negative, actually, and said, cash is trash.
Cash is trash.
And I remember when Ray Dalio said that cash is trash, and I remember talking to my mother, and I said, oh, cash is trash. What do you think about that, Mom? My mom's 75. She ran a nursery school. She's retired. And she said, oh, he means that inflation's going to be bad. And I was like, that's really good, Mom. That is kind of the higher level message of cash is trash. But what does he mean by cash? And she thought he meant like dollars or maybe money in a bank account. She wasn't thinking cash is cash-like securities, which includes things like CDs and T-bills. Any risk-free asset we refer to as cash in the financial industry. And so a couple of days ago, I noticed that Ray Dalio was on TV saying that bonds are trash. And Bill Ackman just went on Twitter and said bonds are trash. So the first thing I did is I looked at what Bridgewater did, what people like Warren Buffett did while people were going on TV saying cash is trash. And actually, surprisingly, they invested in cash. That's what they did. When they were on TV telling people to sell their cash, they were putting a lot of money into cash, especially Warren Buffett. And what's fascinating about that is their clients sold their cash positions, gave it to Warren Buffett or to Ray Dalio, and then they protected that money by putting it in cash. So you can actually think of it as they lied to you to protect you, and to keep you safe. They did charge a management fee on that, so that's a bummer, but they kept you safe. So, it's a good example of how people in the financial industry always tell you what they think, especially when it costs their money and hurts their businesses. So when I saw that Bill Ackman and Ray Dalio were saying that bonds are trash, I had a similar kind of question in my mind, like, oh, maybe I could do some technical analysis, or, just see where bonds have been. Why did I do that? When they said cash is trash, part of the goal of saying cash is trash on television to a novice user is you go and you make a mistake, think they're talking about actual dollars, and then you learn something, right? Oh, cash means cash-like securities like T-bills. And he said that at Davos, I want to be at Davos. I want the cheese board. I've heard it's got great cheese board parties. And then you go try to invest with Bridgewater, you search Bridgewater and help their Google rankings, And so I think when they say bonds are trash, I wanted to ask my mom, does my mom know what he means by bonds are trash? And so I talked to my mom, and she got very worried because she's like, Alex, don't I own a lot of bonds in my retirement? And I said, well, Mom, right now you own a lot of T-bills, but you don't have a lot of duration. And she said, oh, but aren't those bonds? And I said, well, they are kind of bonds, but when we're in the financial industry, when we talk about bonds, we're talking about duration. And so once again, she had learned a lesson. Now she thinks that these finance guys are so smart. T-bills aren't actually bonds. Only, like notes or duration stuff is bonds. She's learning the lingo, a yard of this, a yard of that, all sorts of cool stuff. I kind of got the same feeling that these guys were telling me what they think because they really wanted to help me out, even though I wasn't their client. They don't really need any more business. I know when I call Bridgewater, they won't even take my money. I called them trying to invest and they wouldn't let me. I got kind of the same stinking suspicion, so I started looking at charts. So I noticed that the Fed had pushed interest rates up to past 5%. Maybe you could say the bond market pushed it above 5%, but someone did. So that's already pretty high. And the way that duration assets work is bonds are always worth $1 at maturation. So when they say bonds are trash, what they're saying is that the rates are actually going to go up from 5.5%, and that'll push the price of the bond down. And I thought that was surprising because when I looked at the prices of bonds, the TLT being the ETF which tracks long duration assets, it seems to be an all-time low. So we're at a point now where most people don't think the Fed is going to hike much. So the long bond probably isn't going to go down much. But it could go up a lot. Actually, if it just mean reverted, it would go up a real lot. And if there was any type of economic instability and the Fed reaction function comes in, you could actually, if you were to sell bonds here, be selling at the worst time in human history. Just if you were playing the numbers and assuming that these things could possibly mean revert. So I thought that was really interesting. I shared that narrative with a couple of people who were big fans of Ray Dalio. They had the narrative that what he said was true. And so someone else on the channel said, what I always do when I've got a narrative is I start my position in the opposite direction. So if your narrative is bonds is trash, you actually start buying bonds in small amounts. Just see how that makes you feel. See what that does to your portfolio. Don't do it enough to have like a big impact on your portfolio. And I want to give you investment advice. More of just a process of try and see how the opposite makes you feel. And I think that's probably good advice here, that although cash was trash, now it's paying my mom 6%, probably the best investment I made all year. Since bonds are trash, if you were to do the opposite, you would actually buy the TLT. You could actually get more aggressive. You could actually buy, the TLT has these options that are called leaps. So these are multiple years out. You could buy the January 2025 out of the money call. And, that bet would pay money if instead of the Fed raising rates, if it were to lower rates. And actually, if they were to lower rates really quickly because there was some type of economic impact, you could make gobs of money, huge amounts of money. That being said, it's hard for me to understand how you make gobs of money in the other direction. I don't think Ray Dalio thinks the Fed is going to take rates from 5 to 10%. But I think, let's say if, the Chinese economy were to fall apart and they were to invade Taiwan, then you would probably see it go in the opposite direction from 5 to 0%. And there's this fancy thing called convexity, so that would be a surprisingly powerful move and your options make a lot of money. Anyway, I'm gonna go get ready to pick up my wife. I just wanted to share this lesson about how financial people are nice people that want you to do well by telling you the truth, especially if you're not their client and especially if it hurts their core business. All right, well, thanks so much.